the Sovereign International Treasury Monetary One, date July 22, 2022. Resolution No. 18. By the grace of God, the International Treasury M1 pays its respect and has honor to announce the following. We note that the International Treasury M1, by virtue of its universal character and legitimacy, is a unique and key organization for finding effective solutions to international economic issues and influence the development process in the world, and reaffirms that the International Treasury Monetary One is well positioned to participate in various reform processes aimed at improving and strengthening the effective functioning of the international financial system and its architecture. While recognizing that the International Treasury M1 and international financial institutions are endowed with complementary capabilities, making their coordination critical. We remind that the International Treasury M1 is the owner, controller and manager of the main world sacred spiritual accounts in the World Bank, distributed among various banks in countries around the world, which is the basis of the architecture of the world financial system. The world is facing an unprecedented economic crisis, and in this regard, the International Treasury Monetary One has taken exceptional response measures. The International Treasury Monetary One sets a gloomy and more uncertain forecast for the development of the global economy. The outlined recovery in 2021 was followed by the increasing darkest events in 2022 as risk began to materialize. Global manufacturing declined in the second quarter of this year due to slowdowns in China and Russia, while US consumer spending fell short of expectations. As the global economy, already weakened by the pandemic, is undergoing a series of severe shocks with higher than expected inflation around the world, especially in the US and major European countries, leading to the tighter financial conditions. A military special operation in Ukraine could lead to a sudden halt in European gas imports from Russia, which would have a significant negative impact on the European economy. Reducing inflation could prove more difficult than anticipated if labor markets are either tighter than expected or inflationary expectations weaken. A tightening of global financial conditions will create a critical debt situation in emerging market and developing countries. Geopolitical fragmentation will make global trade and cooperation more difficult. In the likely alternative scenario, the risk materializes and global growth slows to around 2.6% and 2.0% in 2022 and 2023, respectively, with growth among the lowest since 1970, below 10%. As rising prices continue to lower living standards around the world, breeding inflation is a top priority for policymakers. Tightening monetary policy will inevitably come with real economic costs, but delay will only exacerbate them. Targeted fiscal support can mitigate the impact of the most vulnerable, but as government budgets have been depleted by the pandemic, and disinflationary overall macroeconomic policy stance is needed, such policies will be offset by higher taxes and lower public spending. Tighter monetary conditions will also affect financial stability, necessitating prudent use of macroprudential instruments and making reforms to debt resolution arrangements even more necessary. Policies for specific impacts on energy and food prices should target those who are affected first without causing price distortions. The world needs to seize the opportunity to create a better future. The International M1 is taking not only policies to strengthen the recovery in the near term, but also transformative measures that provide the foundation for a greener and more inclusive global economy of tomorrow. More than ever, we are noticing the profound impact of the Corporation of the United States of America crisis on macroeconomic performance and financial stability, and we place these important aspects of our work at the center of our work. Along with operational and emergency measures, the International Treasury M1 has approved loans to 86 countries totaling more than 170 billion ECUs, which is a record figure. Another unprecedented measure was the approval of a new allocation of special drawing rights, SDRs. This is the largest ever distribution of 6 trillion in XEU. This measure will allow governments to significantly increase the amount of reserves and liquidity without increasing the debt burden. We also continue to explore options for transferring SDRs to vulnerable countries from the International Treasury M1. Having expanded cooperation with low-income countries, another priority for the International Treasury M1 has been to help countries deal with the growing public debt problem. The heavy debt burden at the start of the crisis left many low-income countries more vulnerable and countries to limit the ability to provide much-needed political support. We are expanding concessional financial for lower-income countries to provide debt relief to the 12 poorest countries, giving them the room to maneuver. The International Treasury Monetary Fund reiterates its readiness to strengthen the capacity of institutions such as central banks, ministries of finance, tax administrations, statistical agencies, and financial sector supervisions, leading to more effective policy measures as well as increased stability of the economy with coverage-wide sections of the population. The International Treasury М1 will continue its capacity-building activities in areas such as public finance, financial sector stability, and economic statistics. The International Treasury М1 will continue to closely monitor income inequality, corruption, and climate change to develop new measures within this area of expertise. The International Treasury М1 is uniquely positioned to support governments through its global reach, institutional expertise, and world-class expertise. The International Treasury М1 capacity development activities benefit all states, but in particular, support is directed to the most vulnerable states. The International Treasury Monetary Fund is trying to quickly adapt its capacity development assistance tools to new formats due to the growing trend of the global economic crisis covering more and more countries. We state that according to the presence of the power to own and dispose of the main world secret accounts distributed among various banks in countries around the world, which is the basis of the architecture of the world financial system, the International Treasury М1 is the main regulator of the world financial system and rightfully owns the main world assets, which are at the heart of financial institutions such as Federal Reserve, Bretton Woods institutions, in particular the International Monetary Fund, the International Bank for Reconstruction and Development, IBRD, and the additions to the IBRD, the International Development Association, IDI, the International Finance Corporation, the Multilateral and Finance Guarantee Agency, the International Center of the Settlement of Investment Disputes, being the World Bank Group. We remind, solving the global problems of human development, the World Bank using the IBRD lending mechanisms, lends to middle-income countries at interest rates corresponding to the level of the market of these countries. Another financial institution of the World Bank, IDA, lends to low-income countries at minimal or no interest rates. An analysis of the development of the world economy shows that the programs of the World Bank, in the form of which they were formulated of the World Bank, didn't ensure the sustainable and fair development for the economies of countries, and took into account the spread of interest exclusively for the cooperation of the United States of America, making these institutions a tool in promoting their neo-colonialist interests in relation to many countries. Many organizations at the national and international levels began to seek open, publicly fair consideration of alternative solutions to the World Bank's policy, but no steps were taken towards the world community. The unstable economic situation in Europe has a negative impact on the state of the world economy. We are forced to take measures to stimulate the economies against the debt crisis in the Eurozone due to the fact that European debt problems have a negative impact on the global financial market. The Federal Reserve System has now shown its inability to exercise control over the activities of the financial institutions of the United States of America, strengthen their resistance to shocks in the global economy, reduce inflation, responding in a timely manner to the slightest changes in the economic situation, and stabilize economic growth in general. There are various channels of cross-border transmission of monetary policy, which can be conditionally divided into two groups: real and financial channels. The first included demand channels that affect the economy through trade relations. The growth of the money supply within the country stimulations an increase in demand for imported goods, which means it acts as a driver of economic activity in the trading partner countries. To some extent, this effect is offset by the depreciation of the local currency and the easing of monetary conditions. Changes in the monetary policy of the United States of America lead to changes in the prices of foreign assets, to a great extent the prices of bonds. In addition, the monetary policy of the United States of America has an impact on the prices of raw materials in the global market. First, through a change in the dollar exchange rate, a depreciation of the dollar leads to an increase in the price of oil in dollars. Secondly, through a change in the interest rate or other conditions of the monetary policy of the United States of America. A change in the interest rate affects both the real sector. A rate cut contributes to an increase in economic growth and an increased demand for energy, and financial markets, in our case, the market for derivative securities for raw materials. The policy of quantitative easing, which was carried out by the Federal Reserve System of the United States of America, In addition to stimulating the effect of the global financial system, has also an impact of the international movement of capital. Many countries with underdeveloped financial markets keep the interest rate high enough to support the exchange rate. Mostly, there is an inflow of short-term capital to countries with emerging markets, which creates the threat of bubbles in financial markets. The policy of the quantitative easing in the United States of America and the associated changes in capital flows contribute to the appreciation of currencies in emerging markets, which in turn creates prerequisites for negative changes in the current account balance. To stop the collapse of the international currency, financial regulations in many emerging markets, including Turkey, South Africa, Argentina, Brazil, Chile, Colombia, Mexico, India, Indonesia, Pakistan, the Swiss Republic, resorted to raising interest rates and conducting foreign exchange interventions. It is noteworthy that countries that previously experienced the more noticeable appreciation of the national currency and deterioration in the current account are experiencing the greatest negative effect. Countries with stronger macroeconomic fundamentals, developed financial markets, and tighter macroprudential policies felt less pressure. The movement of U.S. Treasury rates in the United States of America is in line with the movement of federal funds rates. In a number of countries, the interest rate largely depends on the monetary policy pursued by the United States of America. Globalization has led countries to independence on the policies of other states. The decision of Federal Reserve System of the United States of America can influence economic processes far beyond its borders. In particular, there is a reason for impact for non-standard monetary policy measures of the United States of America on the economies of developing countries. When the short-term interest rates reach zero values, central banks lose the ability to influence liquidity with its help. Caught in a liquidity trap during the global financial crisis, financial regulators in various countries are forced to resort to other, non-standard methods of conducting monetary policy. Today, the concept of non-standard monetary policy is not strictly defined. Today, the US dollar is the world's currency. The Federal Reserve System, FRS, is of great importance for all events in the world. The main research levers are loans issued by the International Monetary Fund, as well as the research levers of the requirements of organizations. Foreign assets control the Basel Committee of Banking Supervision and the requirements put forward by the central banks of other countries. The constant maintenance of the world economy is the necessary amount of the US dollars was formed as the basis of various assets, which were based on the assets of the International Treasury M1 investment portfolios, and natural resources, and even natural resources that had not yet been extracted. But all this made it possible to form so-called financial bubbles, which today there are a lot. And in order to keep the world economy going, the FRS is constantly keeping the mass of a US dollar in the world economy. One of the problems in the formation of financial bubbles was the accumulation of US dollars on the accounts of various holders, who instead of investments chose simple accumulation. This trend forced the FRS to look for ways to form new emissions of US dollars. One of the main assets for formation of US dollars was the assets of the International Treasury M1, which practically became the basis for savings of all holders with figures more than 50 billion US dollars in bank accounts. The so-called private placement programs, the so-called PPP programs, played a special role in the introduction of multi-billion trillion-dollar assets into the global financial system based on the assets of the International Treasury M1. Bankers call these programs leverage, where the holder's capital is used to borrow with leverage multiplier. The basis of the loan was the introduction of the assets of the International Treasury M1 into the global financial system. This is how the pools of the Deutsche Bank and other top 25 banks were formed, and today there is an active embezzlement of funds from the accounts of the Deutsche Bank. With the support of senior management of the Deutsche Bank, and the organizers of crimes do not appreciate the damage they bring to the collapse of the global financial system. In this regard, the International Treasury M1 began to actively block transactions for the movement of billions, trillions, quadrillions, blocking transactions in interbank settlement system including RTGC, FedNow, SCPA systems. To deter the collapse of the world economy, the International Treasury M1 introduced prohibitive and restrictive measures and began to actively block the activities of the FRS in the formation of new issues of US dollars based on the assets of the International Treasury M1. The FRS, instead of fighting a constructive dialogue, has chosen a policy of confrontation with the International Treasury M1. The International Treasury M1 initiated the start of negotiations in order to find joint measures to resolve the current situations, but each time the initiated dialogues came to a standstill. This was the beginning of the process by the International Treasury Monetary One to neutralize the negative impact of the FRS in all spheres of influence in the global economy. Particular attention must be paid to the short-sightedness of several generals of the Russian Federation surrounded by President Vladimir Vladimirovich Putin, who as their people's traitors and key persons in their group, the Illuminati and Baitan Lodge, Five Eyes in Russia, who without clear understanding the events taking place in the global financial system, aspired to suck up their masters, the Rothschild and Rockefellers, were initially presented as the project creators in the International Treasury М1, not being such a reality. Wanting to improve their position in the eyes of their puppeteers, deliberately misleading them, then to make a huge positive effect on the activities of the International Treasury М1, in particular, changing the architecture of the global financial system. These generals of the special services of the Russian Federation transmitted misleading documents, materials, about the alleged mental inadequacy of the leadership of the International Treasury М1, which made it possible for the International Treasury М1 to remain underestimated in its capabilities for a long time, and made it possible, being out of position of the Rothschild and Rockefellers, to build a foundation and gain full control of AI as the main assets of the global financial system. By such actions, the Russian generals mislead the owners of the FRS, understanding the capabilities and influence of the International Treasury М1, putting the FRS today in a critical situation, from which there is no way out, as a result, the economic collapse of the corporation of the United States of America. Although the establishment of a constructive dialogue with the International Treasury М1 is still able to correct the current situation with the perspective of partial functions of the FRS in the global financial architecture. The International Treasury М1 have begun systematic blocking of transactions using the assets of the International Treasury М1 to reduce the influence of the FRS on the world economy, which today began to be felt primarily on the leading countries. The mechanisms launched by many countries for the transition to mutual settlements and national currencies once again confirm the understanding of the need to reduce dependence on the US dollar. An important role is played by the assets of the International Treasury М1, which, contrary to prohibitions, are used by the FRS to its own detriment. Earlier, issuance of US dollars was backed by golden certificates of deposit. This made it possible to introduce into the world economy a constant influx of US dollars, backed by assets held and managed by the International Treasury М1. Today, this is no longer possible, and all efforts are in vain. The basis of the FRS financial policy has now been limited to the adjustment of the interest rate. According to the plan, 8 committee meetings are held on this issue during this year. There are situations when it's necessary to hold additional meetings at which decisions are made to change the interest rate. We have seen this year the United States Department of Treasury, USA, chief executed in a way attempt to increase the United States of America national debt limit when the United States Congress, after much deliberation, made the decision to increase the limit with difficulty, showing the whole world Congress incompetence, lack of understanding of what is happening in the economy, and frankly, treacherous actions towards his American people. The change in the interest rate of the FRS entails a certain reaction of large investors and businessmen around the world. As a result, the FRS has a direct impact on the economy in the world. Especially this year, the impact on the global economy is negative. It should be noted that everything is interconnected in the financial world, therefore, the FRS has a direct impact on the forex market as a whole. All over the world, investors and large businessmen buy and sell currencies of various states to make their profit. During the meeting of the Federal Reserve Committee on the interest rate, all participants in the global financial market are closely following this event, as a change in this value will entail a whole series of economic changes. As a reminder, the Federal Reserve System is a privately held joint stock company in the United States of America that acts as a country's central bank. It consists of 12 reserve banks scattered through the country. The main task of the organization is to regulate the American economy by issuing money supply in circulation and changing the interest rate. The US dollar is world currency, and all currencies are usually counted through it. As a result, changing the interest rate will definitely lead to a sharp movement in the price of the currency pair. Investors, businessmen and traders around the world are following the meeting of the Federal Reserve Committee very closely. If a decision is made to change the interest rate, this will affect the value of not only the world currencies, but also other assets around the world. International portfolio managers are beginning to be less optimistic about the future of the global economy. This was facilitated by the FRS comments on the monetary policy. Under such conditions, managers increase the share of cash in portfolios, reducing investments in shares of companies in developing countries. The dependence of the European economy on the policy of the FRS has become more significant recently, during the beginning of the economic crisis formed by the pandemic. The European debt crisis or sovereign debt crisis in a number of European countries is a debt crisis that in 2010 first engulfed the peripheral countries of the European Union and then spread to almost the entire Eurozone. For some Eurozone countries, it has become difficult or impossible to refinance public debt without the help of intermediaries. The Eurozone has an inflexible monetary policy, since all members of Eurozone are required to adhere to a single monetary policy. Individual countries can no longer issue national currencies in order to make payments or obligations to creditors or reduce the risk of default. The International Treasury M1 welcomes the European countries that are actively involved in a productive dialogue in search of solution in the debt crisis. We would like to assure you that the International Treasury M1 adheres to all previously issued resolutions and is determined to provide the necessary assistance in finding constructive ways to solve complex problems of overcoming the debt crisis for a systematic transition to economic growth in the European countries that applied. The International Treasury M1 confirms its readiness to provide the necessary amount of assets secured by banking gold to finance projects and form sustainable economic development. The International Treasury M1 has expressed its rejection of any form of discrimination and support for racism by many European countries. In this regard, the increased actions of European politicians in Russophobia and efforts to transfer the special operation of the Russian Federation in a large-scale war with NATO countries with the United States of America are of concern. We once again warn against such rash steps that will inevitably lead to the destruction of Europe and the United States of America Corporation. We call for tolerance and prudence in decision-making in order to prevent a repetition of the destruction of humanity, as it has happened before. Thanks to senses of history, today many don't even know that a large-scale nuclear war wasn't so long ago, leaving the ruins of a past civilization to us as a legacy. But we, who are in management of the International Treasury M1, remember these times well, and the period of the beginning of construction of a new civilization. Today's politicians who carry out the negative scenarios of the puppeteers, promoting the ideas of totalitarianism as a superiority of some over others, don't know or don't remember the bitterness of losses and the consequences of the war. According to the new architecture of the world financial system, the relationship, work and regulation of all treasuries of the world is carried out by the International Treasury Department of the International Treasury M1. Taking into account the effect of Resolution N017 of May 13, 2022, the declared default of the Corporation of the United States of America, and all its subjects and sub-entitles of law, the announcement of the launch of the liquidation process of the Federal Reserve System, to eliminate the negative consequences of the Jamaican currency system, the annulment of the peg of the currencies of other countries to the dollar that has become world reserve currencies United States of America, Euro to end neon-colonialism by the United States of America Corporation with the support of London City, the International Treasury M1 decides to cancel the rights and opportunities of the Board of Governors in the Federal Reserve System to form any measures, decisions, resolutions, domestic and international policies based on the use of the assets of the world financial system administered by the International Treasury M1, in particular the basis world sacred spiritual accounts in the World Bank, distributed among various banks in countries around the world, which is the basis of the architecture of the global financial system and grounded in a database of assets in countries and other assets and funds. To cancel the rights of the Board of Governors of the Federal Reserve System and the formation measures, decisions, resolutions, international financial policy, the removal of such powers and rights from persons of the Board of Governors of the Federal Reserve System on 19th of June 2022. Mr. Jeremy Powell, Chair, Miss Michelle Bowman, Miss Lyle Brainerd, Vice Chair, Miss Lisa D. Cook, Philip Jefferson, Mr. Christopher Waller, and others, holding positions and following the regulations of the internal policy or rotation and subsequent appointed persons, are deprived of the right to make decisions, measures, resolutions, international financial policy, which may have a negative impact on the architecture of the world financial system, based on the use of assets of the world financial system administered by the International Treasury M1. Given the lack of centralized decision-making between the FRS and the FRS banks, this revocation also applies to FRS banks whose executive and members of the FRS Board of Governors: 1. Boston, 2. New York, 3. Philadelphia, 4. Cleveland, 5. Richmond, 6. Atlanta, 7. Chicago, 8. St. Louis, 9. Minneapolis, 10. Kansas City, 11. Dallas, 12. San Francisco. Taking into account the aggressiveness of the neocolonial activities of the FIORES units, the United States Department of the Treasury, in particular control of foreign assets, the International Treasury M1 notifies the deprivation of the status of all controllers, and in this regard activates the blockade of the international financial systems of the access rights to freeze and block assets. In case of violations and fixations of violations by our specialists, the International Treasury M1 will take retaliatory measures with the possible complete suspension of the work of the FIORES, the United States Department of the Treasury in the field of interbank settlement system, such systems as FedWire, FedNow, CHIP, ABA, US SWIFT. Persons holding positions in departments under the Division of International Finance and following the international rotation regulations and subsequent appointments are deprived of the right to make decisions that may have a negative impact on the architecture of the world financial system, based on the use of the global financial system assets administered by the International Treasury M1. Deprivation of the right to make measures, decisions, resolutions, international financial policies that may have a negative impact on the architecture of the world financial system, based on the use of the global financial system assets administered by the International Treasury M1, also applies to the United States Department of the Treasury. Deprivation of the rights to make measures, decisions, resolutions, international financial policy, which may have a negative impact on the architecture of the world financial system, based on the use of the global financial system assets administered by the International Treasury M1, also applies to the World Bank Group, including the International Bank of Reconstruction and Development, in addition to the IBRD, International Development Association, International Finance Corporation, Multilateral Investment Guarantee Agency, International Center for Settlement of Investment Disputes. We emphasize that the deprivation of the rights to make decisions that may have negative impact on the architecture of the world financial system implies the determination of the financial and economic policy based on the use of the global financial assets administered by the International Treasury M1, pursued to promote and strengthen the neocolonialism of the Corporation of the United States of America throughout the world, which in its actions takes into account only its own interests, to the detriment of the interest of other peoples and countries, created artificially created economic crises in countries, wars, poverty, famine, genocide in countries where they do not adhere to the proposed course of the Corporation of the United States of America. The above institutions are the main financial and monetary policy of the Corporation of the United States of America, the main Bretton Woods system, and the Jamaican monetary system that followed it. Such a policy should be reviewed, because there is no place for such policy in the future world, and there will not be. In this regard, the International Treasury M1 offers today still working mechanisms for overcoming the current global financial crisis, including also the use of still working mechanisms of the corporations of the United States of America. During the subsequent stages of the global financial crisis unfolding, in the context of the unfolding crisis within the United States of America, the measures proposed today by the International Treasury M1 will be revised tomorrow based on new realities, challenges, and the number of countries involved in the unfolding global economic crisis. The International Treasury M1 decides to continue dealing with these issues to its specialized divisions, the Special Department for Overcoming the Global Financial Crisis at a Crisis Center. Control and audit of the implementation of this resolution is entrusted to the Executive Committee of the International Treasury M1. Approved, completed, and executed. Date 22nd of July 2022. His Majesty Alexander, Secretary General, Chief Treasurer of the International Treasury Monetary One, President and Chief Operating Officer of Vice Spiritual Boy, RSB Global Corp Incorporated, UNNO 509-519, Om.